New Zealand clamping down on property investors. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Grab your stein of coffee, let's have a look at this article from Bloomberg discussing New Zealand to clamp down on property investors as prices soar. Now many people have mentioned in the comments, and we've looked at it in the past, just the insanity of property prices in good old New Zealand. Now, we complain about property being expensive here in Australia, but once again, the Kiwis seem to have bested us. You got to feel sorry for some of the people trying to get ahead over in NZ. So let's have a look at this article. New Zealand is clamping down on property investors in an attempt to rein in spiralling house prices. The central bank on Tuesday said it will reinstate mortgage lending restrictions on March 1 and tighten them further for investors from May 1. Finance Minister Grant Robertson also said that today the government will unveil measures soon to curb housing demand, particularly from those who are speculating. So the Reserve, this is the problem. The Reserve Bank intervenes in the market with the artificially low rates, and then they have to intervene in the market additionally. There's no such thing as a free market anywhere, really, everyone. The problem with these reserve banks is they intervene and they try and manage it because they apparently know best, and we all pay the consequences of it one way or another. And, well, in Australia and New Zealand, we're getting a property boom, a bubble, which is significantly higher compared to earnings capacity, even though technology has improved. I'd say in some regards, legislation has probably made, legislation and increased size of housing has made them more expensive. But you'd think that with improvements in construction and technology, they should get more cost effective, you'd hope, compared to the past. Hasn't really, has it? So, a growing number of highly indebted borrowers, especially investors, are now financially vulnerable to house price corrections and disruptions to their ability to service the debt, Reserve Bank Deputy Governor Jeff Buscard said in a statement. Highly leveraged property owners, in particular investors, are more prone to rapid fire sales that potentially amplify any downfall. Now that is the real reason they're worried about it here. They're not worried about housing affordability or poor people trying to get into the property sector. They're not worried about the future generation. They're worried about a fire sale. They're worried about the bubble bursting and prices just crashing. Just crashing if people just want to, one after the other, have to sell, have to get out, cut your losses. Remember, for an investor, it's not your home. It's not your home. It's an investment. It's a way to make money. It's a property to ignore and not pay the maintenance on. Just let it run down so you can milk money out of it as much as you can. You've got to make back those management fees. You've got to make back that stamp duty. You've got to make back that interest. So if it's burning a hole in your pocket, you're probably more inclined to let it go. And that's the real concern here. That's why we're seeing all this intervention here in Australia to prop up our property market. They don't want a fire sale, guys. The RBNZ removed lending restrictions last year to ensure they didn't get in the way of policy responses to the pandemic. But predictions of falling house prices never came to pass. Instead, prices soared as New Zealand's economy performed much better than expected, and record low mortgage rates encouraged demand. The reintroduced lending restrictions mean that most owner-occupiers will need a 20% deposit to get a mortgage, while investors will need 30%. From May 1, the required down payment for investors will rise to 40%, the RBNZ said. 40%. Guys, they're trying to curtail this. What will this do to the velocity of money moving around the economy over there? If more and more people need to save bigger and bigger sums just to get a foot in the door, to get a house. Gone are the days of the previous generations had it really lucky. They didn't even realize it. They were earning insanely beautiful interest rates on the savings they could get for deposits. Here in Australia, they weren't forced to put a big chunk of their money into the hands of the union-controlled or bank-controlled super funds. If you like it, that's fine. Go ahead. But it should be voluntary. It's crazy, isn't it? Crazy. The problem is you get generations that weren't taught the past. They don't remember the freedoms that the previous generations had. So they look back and go, oh, how did such and such, they could afford a family and a house and everything on one income. Why can't I do that? I'm failing at life. Guys, you need to look at it in perspective. But now there's some fantastic opportunities as well. The access to education, to knowledge, much greater than it ever was in the past. You don't need to depend on just what's dictated to you by the state. One perfect example is dietary guidelines. Look at the government. Health guidelines are probably a decade behind some of the leading research. It's nuts. I think for many people that'll be the red pill to get them to not simply believe all the facts that are published in the media. Anyway. So the New Zealand house price frenzy exposes the perils of ultra-low rates. New Zealand house prices continue to soar in January, gaining 12.8% from a year earlier. That's the fastest pace since March 2017. Several banks have already moved to tighten requirements for investors amid concerns about the rapid growth in lending volumes. We are now concerned about the risk a sharp correction in the housing market poses for financial stability, Buskund said. There is evidence of a speculative dynamic emerging, with many buyers becoming highly leveraged. The red-hot housing market has become politically charged as first-time buyers are locked out, widening social inequalities. The government last year called on the RBNZ to take house prices into account when setting monetary policy, a suggestion the central bank has rebuffed. Like here in Australia, it's not part of their mandate. Ah, well. Don't worry, kids. I'm sure you'll inherit a house one day. Until they bring in death taxes and take it. That'll happen. They'll have to do it. Guaranteed. Robertson said today that the government will soon unveil the range of measures to address the housing crisis. See, the government, the problem is they're the problem, and people turn to them for the solution. They need to let the market correct. They need to step away. We need to, well, the problem is with our monetary system the way that we have, we've got these Keynesian interventionists running everything. Robertson said today that the government will soon unveil the range of measures to address the crisis. The first of those will be on the demand side measures, which will come in late February, he said. We all know that building more houses, particularly affordable houses, is critical. But we also can do more to manage demand, particularly from those who are speculating. Possible measures include extending the period in which profits on the sale of investment properties are taxable, and making changes to tax deductibility of rental property expenses to make them less attractive investment vehicle. Well, here in Australia we have negative gearing, which people use. I was talking to a mate the other day. They're renting out an apartment they own, and they want to make it a loss on it because they need to negative gear it because they're paying too much tax. That's what people do, guys, and you're hoping then for the capital growth. You're essentially just trying to maintain the value of your assets, maintain your purchasing power. So there we have it, everyone. New Zealand clamping down on property and investors. I feel sorry for our Kiwi cousins. It's going to be tough over there with property getting even more and more expensive, particularly if you're trying to get in. Guys, let me know your thoughts and opinions in the comments down below. Please like, share, and subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. Support us using our affiliate links from Amazon, eBay, Independent Reserve, or Aussiebroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. You can also use SelfWealth, giving us 5 free share trades and getting 5 free yourself. Or you can join MeetRx and get 1 free coaching session and give 1 to us too. Take care, and I'll see you next time. Bye for now.